Hi everybody, it's Dave Aquino with Basecamp Trading, and this is the free video for Wednesday, August 28th, 2019. So I want to bring to your attention the TLT ETF. This is the 20-year Treasury Bond Fund. And the reason why we're keeping an eye on this is that as bonds keep pushing higher in price, this is driving down the 20-year bond yield. This is what's driving the current inversion between long-term treasury bonds and short-term treasury bonds. This is when long-term treasury bonds, which usually carry a higher yield, is actually showing yield below short-term treasury bonds. The market does not like that because it increases. This is traditionally a sign of a recession or an oncoming recession. And the other reason that we're watching this is the fact that I firmly believe, and this is what happens when we had this spike back on the 15th, and then the markets really sold off because it was the first time the yields inverted, is because when we get weakness in Europe, or weakness in any part of the world, when we have a flight to quality, that money comes from overseas into U.S. Treasury bonds. I mean, when we have disruption in our economy, in our markets, money flows into U.S. Treasury bonds. And when they flow into U.S. Treasury bonds, bonds prices get pushed up, the yield drops, and therefore we have a further inversion, a deeper inversion. The markets don't like that, and then they sell off even more. So I think the most important key that I'm trying to mention here is, if you want to know where the market sell-offs are, pay attention to treasury bonds. Because if money starts flowing in treasury bonds, it pushes down the yield. It makes traders more worried. Therefore, stocks sell off even further. So again, keep an eye on bonds and you'll have a good pulse on where the market's going.